Hi, I'm Ray. Today, let's talk about how the US crypto landscape is shifting and what that's going to mean for your own portfolio. With all this market volatility lately, I know a lot of you are losing sleep and feeling pretty exhausted. When those charts swing up and down, it's totally normal to feel anxious and wonder if it's finally over. But listen, friends, we shouldn't get distracted by small wiggles in the chart. What really matters is the massive shift in the game currently happening in Washington, D.C. today. I've got 3 key things to turn your anxiety into confidence. First, that surprising vibe from the White House stablecoin meeting. Second, we'll look at the Clarity Act, a real game changer for clearing up market uncertainty. And finally, I'll walk you through a crucial psychological signal the SEC chairman just sent our way. First off, let's talk about that third White House meeting on stablecoins. Lately, the crypto world and Wall Street have been in a heated battle over whether stablecoins should pay interest. Banks are fighting this tooth and nail, fearing that everyone will pull their savings and move it all into crypto. But things took a turn recently when Patrick Witt, the director of the White House Crypto Council, personally introduced a new draft. The main takeaway here? It sets a firm rule banning any automatic interest on those idle balances just sitting there in your wallet. And here's the kicker. If anyone breaks this rule, agencies like the SEC or the Treasury could slap them with a massive fine. We're talking up to $500,000 every single day. Look, there's no need to feel discouraged just yet. What's interesting is that this draft doesn't actually ban all interest payments. In fact, the White House is still pushing for reward structures linked to specific activities. For instance, it means that giving out rewards when we're transferring coins, making payments, or even trading is perfectly fine. Word on the street is that the White House is actually pushing traditional banks to stop stifling innovation and start making some concessions. This is a huge positive sign. It means regulatory uncertainty is fading away, and the door is finally opening for massive institutional capital to flow in. Now, let's look at the key legislation that's finally clearing away the regulatory fog that's been blocking the flow of capital. The one the market is most excited about right now is the Clarity Act. To put it simply, think of it as a rulebook that settles the turf wars and defines exactly who oversees what. The real key here is clearly sorting digital assets into securities, commodities, and stablecoins. It's a pretty ambitious plan. It puts the CFTC in charge of spot trading for things like Bitcoin, while scaling back the SEC's reach to just traditional securities. Now, this bill already passed the House in 2025 and is currently under review in the Senate. Many experts are feeling quite optimistic, thinking it's got a great shot at passing within the first half of this year. Now, with all the politics at play, I can't promise it'll pass by tomorrow. But listen, once this bill clears the Senate, it's like building a massive highway for institutional money to pour into the US market. We're moving from vague hopes to a solid legal foundation, so you can bet market trust is going to skyrocket. Speaking of regulations, let's look at how the SEC, usually the toughest critic in the room, is changing its tune. Paul Atkins, the SEC chair, recently shared some really interesting thoughts at the ETH Denver event. People have been asking about Bitcoin dropping to $66,000. Atkins was clear. Regulators shouldn't panic or feel the need to step in over daily price swings. This is where I really saw a massive shift in how the SEC treats the crypto market. It's a total 180 from the past, when they just jump in with heavy-handed crackdowns and pressure the market every time prices fluctuated even a tiny bit. The SEC is now emphasizing that their role isn't about propping up prices, but rather streamlining the rules so investors can trade with clarity. They've even laid out a concrete roadmap, covering innovation waivers for tokenized securities and updated custody regulations. This is a very positive signal. It shows that authorities finally view the crypto market as a mature asset class and are ready to respect its natural flow. But wait, are you sitting there thinking, Ray, this all sounds nice, but my account is still in the red, so what's the point? I totally get it, and it's a fair question. But remember, the engine that drives prices up is money, and the fuel for that money is trust. Things like the White House's practical draft, the progress on the Clarity Act, and a more mature stance from the SEC. These are the essential building blocks that make big institutional investors feel safe enough to finally jump in. I've been getting a lot of questions lately asking if the season is finally over. It's totally natural to feel uneasy, especially when we remember how much those past crashes hurt. But let's take a calm look at the foundation we're standing on today. This isn't like the Terra Luna or FTX collapses where everything crumbled like a sandcastle without any safety nets. The situation today is fundamentally different. Right now, Wall Street giants like BlackRock have officially stepped into the arena through spot ETFs. We've reached a point where the US government is setting the rules for stablecoins, and even the SEC, which used to be so tough, is finally working to stabilize the market. This volatility you're feeling isn't a sign that the market's over. It's just a necessary growing pain as we transition into becoming a permanent part of mainstream finance. Let's recap what we covered today. First, the White House isn't just saying no to stablecoins, they're creating practical rules to make them work. Second, the Clarity Act is like building a legal highway, allowing big institutions to invest with confidence. Finally, the SEC is shifting its focus. Instead of stressing over short-term price swings, they're helping the whole market mature. It's all about the long-term vision. You're not here as a speculator looking for a quick jackpot. You're on the path of a true investor, growing with the market's structural strength. Instead of stressing over every single candle on the chart, I want you to trust the big picture scenario being shaped by the government and major institutions. For a small step right now, why not stop staring at those 1-minute charts and look at the weekly or monthly trends instead? Let's move past vague fears and believe in the next leap toward market maturity. We'll get through this together. Make sure to subscribe and hit that like button. This has been Ray, helping you grow your wealth.